Imagine walking into a casino. The lights are dazzling, the slot machines are chiming, and the air feels electric. You hear the clatter of chips, the cheers of someone hitting the jackpot, and the quiet groans of those who just lost. It's a world built on excitement, chance, and adrenaline. But here's the secret most people never think about. In the end, the casino always wins. Always. Not because they win every game, but because the odds are stacked in their favor over time. That's the power of probability. Now imagine bringing that same advantage into your trading. Picture placing trades without the crushing fear of being wrong. Imagine knowing you can lose several trades in a row and still walk away profitable in the long run. This isn't a fantasy. It's the mental game the most consistent traders master. In this video, I'm going to show you how to trade like a casino. You'll discover the simple mindset shift that can transform your results even if you're wrong half the time. Stay with me because what you're about to hear could change the way you look at trading forever.
Let's start with a simple story. Two traders, same starting capital, same strategy, same tools, same market conditions. On paper, their chances look identical. The first trader starts strong. A few early wins boost his confidence, but soon a couple of trades go against him. He doubles down, chasing losses, desperate to be right again. Each loss cuts deeper into his account. Fear starts to cloud his judgment. He overtrades. He takes setups that aren't really there. In just a few months, his account is gone. The second trader's journey looks completely different. He starts with the same wins, followed by the same losses, but his reaction is completely different. Instead of chasing, he sticks to his plan. Instead of trying to be right, he focuses on managing risk. He understands that losses are not failures. They are simply part of the game. Trade after trade, month after month, his account grows, slowly at first, then faster. After a few years, he's not just surviving, he's thriving. What made the difference? It wasn't intelligence. It wasn't having some secret indicator. It wasn't even more experience. The real difference was mindset. The losing trader saw every trade as a test of his worth. Every loss felt personal. The winning trader saw each trade as just one of many in a long series. He didn't need to be right every time. He only needed to follow a process that gave him a small edge and let probability do the heavy lifting. And this is where most traders get it wrong. They obsess over finding the perfect strategy, the magic entry signal, the guaranteed setup. But the truth is, even the best strategy will fail in the hands of the wrong mindset. This video is about shifting the way you think about trading. It's about breaking free from the need to be right and learning to think like the house. Because once you make that shift, consistency becomes possible, and with consistency, profit follows naturally. In the next few minutes, you're going to see exactly how professionals build this mindset and how you can start applying it today, even if you've been struggling for years.
Segment 1. Why needing to be right destroys traders. One of the most dangerous traps in trading is the need to be right. And if you've been in the markets for any length of time, you probably felt it. That moment when a trade goes against you, and instead of taking the loss, you tell yourself, it'll come back. It has to come back. You watch the chart, you watch your unrealized loss grow, and deep down, you're no longer thinking about strategy. You're thinking about ego. This is the emotional poison that ruins accounts. You see, the need to be right turns trading into a personal battle with the market. It stops being about probabilities and process. Instead, every loss feels like a personal attack. Every win feels like validation. And when your self-worth is tied to the outcome of each trade, you start making decisions that have nothing to do with your edge and everything to do with protecting your pride. Let's be clear. Even the best traders in the world are wrong all the time. Many pros are wrong 40 to 50% of the time, but they still make money because they understand something most people never learn. They know that trading isn't about being right on every trade. It's about managing risk so that when you're wrong, you lose small, and when you're right, you win big enough to cover those losses many times over. Think about a casino. The house doesn't care if you win a hand of blackjack or hit a number on the roulette wheel. In fact, they know players will win sometimes. But over hundreds or thousands of plays, their edge ensures they walk away with profit. Now here's the difference between a casino and the average trader. The casino never changes the rules of the game because of a few bad rounds. But a trader who needs to be right will change position size, change strategies, and take reckless trades, all because they can't accept losing. That mindset is deadly. Here's why. When you can't accept being wrong, you hold losing trades far too long, hoping they'll turn around. This often leads to catastrophic losses that wipe out weeks or months of gains in a single day. And when you finally close that losing position, the emotional damage is just as bad as the financial one. You start second-guessing yourself. You hesitate on good setups. You take bad setups out of frustration. This creates a destructive cycle. You lose, you feel the need to get it back, you take bigger risks, you lose again, the hole gets deeper. But there's a way out. It starts by understanding that in trading, you can be wrong more often than you're right and still make money. The key is to stop thinking in terms of individual trades and start thinking in terms of a series of trades. Here's an example. Let's say your strategy has a 50% win rate. On paper, that might not sound impressive, but if your average winning trade makes twice as much as your average losing trade, you have a strong edge. Over time, that edge will compound in your favor. But here's the catch. That edge only works if you take every trade according to plan. Skip trades because you're afraid, or double your risk because you feel this one will win, and you break the math. When you need to be right, you can't play the long game. You're too focused on the short-term outcome, and in trading, short-term thinking kills long-term success. So how do you break the need to be right? First, redefine what success means. Success in trading is not measured by being right. It's measured by how well you execute your plan. Did you follow your rules? Did you manage risk? Did you take the trade without hesitation and accept the result without emotional chaos? That's success, even if the trade lost money. Second, detach your self-worth from your P&L. A losing trade does not mean you're a bad trader, just like a winning trade doesn't mean you're a genius. Both are simply outcomes in a probabilistic game. Third, train yourself to think like a casino. Expect losses, plan for them, accept them as the cost of doing business, and focus on making sure your winners are bigger than your losers. When you let go of the need to be right, you free yourself from emotional overreactions. You stop fighting the market. You start flowing with it. And that's when trading stops being a stressful, exhausting grind and starts becoming a calculated, disciplined process. In the next segment, we're going to talk about the emotional roller coaster that keeps traders stuck in destructive patterns and how to break free from it once and for all. Because mastering your mindset is not just about accepting losses, it's about building a mental framework that keeps you consistent no matter what the market throws at you.
Segment 2. Breaking the Cycle. Most traders don't lose because they lack a good strategy. They lose because they're trapped in an emotional loop. It goes like this. You win a few trades. Your confidence surges. You start taking bigger positions because you feel invincible. Then you hit a loss. It's just one, so you brush it off. But then comes another. And another. Now you're not just trading the market, you're trading your emotions. Fear creeps in. Every trade feels like a risk to your survival.
You cut winners too soon. You let losers run too long. You hesitate on setups you should take. And then, when frustration peaks, you swing to the other extreme, revenge trading. It's an exhausting, destructive cycle. And here's the truth. Most traders stay in it for years, slowly bleeding capital until they either give up or blow up their account entirely. So, how do you break free? Step 1. Recognize the pattern. You cannot fix a problem you refuse to see. Start tracking your trades and your emotions. Write down not just your entry and exit, but how you felt before, during, and after the trade. Step 2. Separate process from outcome. A good trade can lose money, and a bad trade can make money. The result doesn't define the quality of the decision. Judge yourself by execution, not by short-term profit or loss. Step 3. Build rules that protect you from yourself. Fixed risk per trade, a maximum daily loss limit, a maximum number of trades per day. These are not just risk management tools, they are emotional brakes. They keep you from spiraling when things go wrong. Step 4. Slow down. If you're in a losing streak, don't speed up to make it back. Reduce size. Trade less. Focus on regaining clarity, not recovering money. When you implement these steps, something powerful happens. You begin to create distance between yourself and your emotions. You stop reacting to every tick of the market like it's a personal attack. You start operating like a professional, measured, deliberate, and patient. This is how you break the destructive cycle that traps most traders. It's not about eliminating emotion. You can't. It's about building systems that keep emotion from running the show. In the next segment, we'll uncover the market's true nature and why learning to embrace uncertainty might be the most profitable mindset shift you'll ever make.
Segment 3. The market's true nature. The market is not your friend, but it's not your enemy either. It doesn't care about your hopes. It doesn't care about your fears. It doesn't care if you need to pay your bills this month or if you just lost 3 trades in a row. The market simply moves. It's a living, breathing flow of buying and selling, driven by millions of different opinions, emotions, and decisions, all happening at once. And here's the key truth. The market lives in uncertainty. Every candle on a chart is unique. Every setup has a slightly different context. Every trade exists in an environment that has never happened before and will never happen again. This is why so many traders fail. They expect the market to give them certainty. They search for the one indicator, the one pattern, the one secret formula that will guarantee profits. But certainty doesn't exist here. And that's actually good news. Because the traders who embrace uncertainty, who accept that anything can happen, are the ones who stop fighting the market. They stop trying to predict every move. Instead, they focus on playing the odds, just like a casino. Think about it. A casino never knows who will win the next hand of blackjack. But they do know that over a series of thousands of hands, their edge will show up. They accept the uncertainty of each hand because they have certainty in their long-term advantage. This is how you must view the market. Every trade is just one event in a long series. Some will win, some will lose. You don't need to know which will be which. You only need to know that your method gives you a statistical edge and that you have the discipline to execute it without breaking the rules. When you stop demanding certainty from the market, you free yourself. You stop overanalyzing. You stop second-guessing. You start trading with clarity and confidence even when you don't know what will happen next.
In the next segment, we'll break down the 5 universal trading truths that every consistently profitable trader understands. Once you internalize these, you'll never look at a chart the same way again.
Segment 4. 5 Universal Trading Truths. If you want to trade like a casino, you need to think like one. And that means living by a set of unshakable truths, principles that hold up in any market, any time frame, any strategy. Here are the 5 universal trading truths that every consistently profitable trader understands. Truth number 1. Anything can happen. The market can spike up, crash down, or move sideways with no warning. A single piece of news, a sudden shift in sentiment, or even a large institutional order can change everything in seconds. The moment you believe you know what will happen next, the market will prove you wrong. Accept it. Truth number 2. You don't need to know what will happen next to make money. This is where most traders struggle. They think the only way to profit is by predicting perfectly. But in reality, you can be wrong half the time and still be profitable if your winners are bigger than your losers. Truth number 3. Wins and losses come in random distribution. Even with a great strategy, you can have 5 losers in a row and then 3 huge winners back to back. You can't control the sequence. You can only control how you execute each trade. That means treating every setup exactly the same, no matter what happened before it. Truth number 4. An edge is nothing more than a higher probability. Your strategy is not a crystal ball. It's just a method that gives you a small advantage over a large sample of trades. That advantage might only be 5 or 10%, but over time, that's enough to produce consistent profit. The catch? You have to let the math play out. Truth number 5. Every moment in the market is unique. No matter how perfect a setup looks, it's never the same as the last one. The surrounding conditions, volatility, volume, sentiment are always slightly different. This is why blindly copying past trades is dangerous. You must adapt while still following your core rules. When you internalize these 5 truths, trading stops feeling like a guessing game. You no longer need to win every trade. You no longer panic after a losing streak. You start thinking like the house, detached from individual outcomes, focused on the big picture. In the next segment, we'll explore how your beliefs about the market directly shape your results and why most traders unknowingly sabotage themselves before they even place a trade.
Segment 5. How beliefs shape results. Every action you take in the market comes from one place, your beliefs. Your beliefs about how the market works. Your beliefs about what risk means. Your beliefs about yourself as a trader. And here's the part most people miss. If your beliefs are wrong, it doesn't matter how good your strategy is. You'll still sabotage yourself. Let's take a simple example. If you believe the market is out to get you, every small pullback feels like a personal attack. You'll jump out of trades too early, cut winners short, and constantly second-guess yourself. If you believe you must be right on every trade to succeed, you'll avoid taking setups you should take, just to protect your ego. You'll let losers run, hoping they turn around, because admitting you're wrong feels like failure. If you believe trading is about finding the one perfect strategy, you'll keep hopping from system to system, never giving any method enough time to prove itself. But if you believe losses are a normal cost of doing business, you'll take them without hesitation. If you believe your edge will show up over time, you'll stick to your plan even through losing streaks. And if you believe your job is to execute the process, not predict the market, you'll stop stressing over what happens next. Here's the truth. The market will always reflect back what you believe. Not in some mystical law of attraction way, but because your beliefs drive your behavior, and your behavior drives your results. Two traders can look at the exact same chart and see two different stories because they bring different beliefs to the table. One sees opportunity, the other sees danger, and each will act in a way that makes their belief true. So if you want better results, you don't just change your strategy, you change the beliefs guiding your decisions. The fastest way to do this is by asking yourself one simple question after every trade. What belief drove that action? Over time, you'll start spotting the patterns, the beliefs that help you and the ones that hurt you. In the next segment, we'll shift gears and dig into thinking in probabilities, the mindset that finally removes the emotional roller coaster from your trading and replaces it with calm, calculated consistency.
Segment 6. Thinking in probabilities. If there's one mental shift that separates amateur traders from professionals, it's this. Pros think in probabilities, not certainties. This idea is simple, but for most traders, it's hard to live by. When you think in certainties, every trade feels like a verdict. If it wins, you feel validated. If it loses, you feel like you failed. The pressure is constant. Every trade becomes a high-stakes test of your worth as a trader. But when you think in probabilities, the pressure fades. Here's why. You understand that no single trade matters. What matters is the outcome of many trades over time. You know losses are not only possible, they're inevitable, and you plan for them. Think about flipping a coin. If you flip it 10 times, the sequence might surprise you. You could get heads, 6 heads in a row. You could get heads, tails in a perfect pattern. But if you flip it 1,000 times, the results will always gravitate toward 50-50. Now replace coin with trading edge. Your edge might give you a 55% chance of winning over a large sample of trades. That means in the short term, anything can happen. You could lose 5 trades in a row. You could win 10 in a row. But over 100, 200, 500 trades, your results will gravitate toward that 55% win rate. And if your winners are bigger than your losers, you'll make money. That's the casino mindset. They don't care about the outcome of the next game. They care about the outcome of the next 10,000 games. Here's where most traders fail. They treat each trade as if it's the only one that matters. They overanalyze it. They raise their position size when they feel certain. They cut it early if it moves against them by a few ticks. In doing so, they destroy the very probabilities that would have made them profitable. When you truly think in probabilities, you stop doing that. You follow your plan trade after trade, win or lose, because you know that's the only way your edge can work. Here's the mental framework pros use. 1. Define your edge. You must know exactly why your strategy works. Maybe it's a breakout setup that works 52% of the time but gives you 2-to-1 reward to risk. Maybe it's a mean reversion play that wins 60% of the time with a 1-to-1 risk profile. Whatever it is, know the numbers. 2. Accept the randomness in the short term. You cannot control the sequence of wins and losses, so stop trying. Treat each trade the same, no matter what happened before. 3. Manage position size to survive losing streaks. Even a good edge will produce streaks of losses. Professionals size small enough that they can take dozens of consecutive trades without risking their account's survival. Amateurs blow up because they bet too big. 4. Evaluate results over a large sample. Judge your strategy over 100 trades, not 5. The smaller your sample size, the more luck plays a role. 5. Focus on execution, not outcome.
Your job is not to make every trade win. Your job is to execute your plan flawlessly. If you do that, the probabilities take care of the profits. This way of thinking transforms how you feel about trading. You stop riding the emotional roller coaster. A loss doesn't ruin your day. A win doesn't make you reckless. Every trade becomes just another hand in the game, one step in a long series that, if played correctly, will lead to consistent profit. And it changes how you respond to mistakes. Instead of beating yourself up for a single bad trade, you zoom out and see it in the context of your long-term results. You make adjustments where needed, but you never abandon your process because of short-term noise. Thinking in probabilities is not just about making more money. It's about creating the emotional stability you need to trade for years, even decades, without burning out. And here's the best part. Once you master this mindset, you start making decisions like a professional without even thinking about it. You see the market's uncertainty not as a threat, but as the environment where your edge can play out. In the next segment, we'll break this down even further into the 3 core rules that will help you apply probability thinking to every trade you take, so you can protect your capital, keep your emotions in check, and finally, trade like the casino.
Segment 7. The 3 core rules. Now that you understand probability thinking, it's time to make it practical. These are the 3 core rules that professional traders live by. Follow them and you protect your account. Ignore them and you eventually blow up, no matter how good your strategy looks on paper. Rule 1. Always have a defined edge. If you don't know exactly why your setup works, you're gambling blindly. Your edge could be a statistical pattern you've backtested. It could be a repeatable price action setup you've tracked for hundreds of trades. But here's the key. You must be able to explain why it works, how often it works, and what the average win and average loss look like. Without that knowledge, you're playing without a plan. And in trading, no plan means no survival. Rule 2. Manage risk like your life depends on it, because it does. In trading, your capital is your oxygen. Run out of it, and you're done. Pros keep their risk per trade small, often 1% or less of their total account. That way, even a losing streak can't knock them out of the game. Think about it. Casinos limit how much they risk per hand. They never bet the house on a single spin of the wheel. You shouldn't either. Rule 3. Keep playing long enough for your edge to work. Your edge is not magic. It needs time and repetition to produce results. That means no quitting after a losing streak, no jumping to a new system after 5 bad trades, and no doubling your position size because you feel lucky. Your job is to survive long enough to let probability do the heavy lifting. In other words, stay in the game. Here's the beauty of these 3 rules. They don't just protect your capital, they protect your mind. When you know your edge, keep your risks small, and commit to playing the long game, trading stops feeling like a constant battle. You no longer fear each trade. You simply take it, log it, and move to the next. Wins and losses become data points, not emotional earthquakes. In the next segment, we're going to tackle the 4 fears that sabotage most traders. Because even with the right rules, fear can sneak in and ruin your decisions unless you know how to conquer it.
Segment 8. Conquering the 4 fears. Even with a solid edge, tight risk management, and a long-term mindset, fear can still sabotage your trading. There are 4 main fears that almost every trader battles. Ignore them, and they will control you. Face them, and they lose their power. Fear number 1, the fear of losing. Losses feel painful. That's human nature. But in trading, losses are not just inevitable, they are part of the cost of doing business. Professionals don't try to eliminate losses, they manage them.
When you risk small on each trade, losing becomes acceptable. You're no longer betting your future on a single outcome. Fear number 2, the fear of missing out. This fear makes you chase trades you shouldn't take. You see the market moving without you, and you jump in late, usually right before it reverses. The cure is to accept that there will always be another opportunity. The market is endless. Missing one trade means nothing in the big picture. Fear number 3, the fear of leaving money on the table. This fear pushes traders to hold on too long, turning winning trades into break-evens or even losses. The solution is to have a clear exit plan before you enter. Follow it without hesitation. Once you're out, be at peace with it. You took your share. Let the rest go. Fear number 4, the fear of being wrong. This is the ego killer. It makes you hold losing trades far too long, hoping they'll turn around just so you don't have to admit defeat. The fix? Redefine what it means to be right. Being right in trading means following your process, not winning every trade. Here's the truth. These fears never fully disappear, but when you have structure, risk limits, clear entry and exit rules, and a process you trust, fear loses its grip. Trading without fear isn't about becoming emotionless. It's about having a framework so strong that emotions can't push you into bad decisions. In the next segment, we're going to step inside the mind of a professional trader so you can see exactly how they think, react, and make decisions in real time.
Segment 9. Inside a Pro Trader's Mind. Step into the mind of a professional trader for a moment. Here's what you won't find: constant doubt, frantic chart watching, or desperate guessing. A pro trader starts each day with a plan. They know exactly what setups they're looking for. They know the market conditions that favor their strategy. And they know exactly when they'll step aside if those conditions aren't present. When they enter a trade, they've already accepted 2 possibilities. This trade could win or it could lose. Both are fine. The outcome won't change their emotions because their risk is already controlled. They've sized the positions so that even a loss is just part of doing business. When a trade is moving against them, they don't pray, they don't hope, they don't hold on, trying to will the market back in their favor. If their stop loss is hit, they exit. No hesitation, no drama. And then they move on to the next opportunity. When a trade is working in their favor, they don't suddenly double down out of greed. They follow the plan. They take profits where they intended to take them, and they let the rest run only if it's part of their rules. This is the key difference between pros and amateurs. Amateurs think in terms of individual trades, win or lose, right or wrong. Pros think in terms of hundreds of trades over months and years. They treat trading like running a business, not like trying to win the lottery. They know their edge, they apply it with discipline, and they let probability handle the rest. Inside a pro trader's mind, there's no need for certainty, no emotional roller coaster, no ego war with the market. There's just the plan and execution. In the next segment, we'll talk about something every trader dreams of, but few achieve: the flow state, that mental zone where trading feels effortless, decisions are automatic, and results follow naturally.
Segment 10. Finding your flow state. Every trader has experienced it at least once, that moment when everything just clicks. You're calm, you're focused, you see the setups clearly, you execute without hesitation. There's no overthinking, no panic, no rush, just pure, effortless action. That's the flow state. It's not magic, it's not luck, it's the mental zone where your skills, your preparation, and the market's opportunities align perfectly. For a pro trader, the flow state is where they do their best work. It's where they follow their plan without resistance, where decisions feel natural instead of forced,
and where they're completely present in the moment, not thinking about the last trade, not worrying about the next one. So how do you get there more often? First, you remove distractions. When you trade, you trade. No phone scrolling, no watching unrelated news. Your attention belongs entirely to the market and your process. Second, you build routines. Pros don't wing it. They have pre-market checklists, risk limits, and review processes that create a stable mental environment. The more structured your process, the easier it is for your brain to slip into flow. Third, you trust your preparation. Flow comes from confidence, and confidence comes from repetition. The more you've tested your strategy, the more you believe in it, and the less your mind fights you when it's time to pull the trigger. And finally, you manage your emotions. You can't enter flow if you're tilted, frustrated, or fearful. That's why pros protect their mindset as fiercely as they protect their capital. When you're in the flow state, you stop forcing trades. You let the opportunities come to you. You execute your plan with precision, and you leave the market when your work is done, win or lose. In the next segment, I'm going to give you a 30-day action plan to help you start building this mindset, locking in your discipline, and trading like the casino, even if you've been inconsistent for years.
Segment 11. Your 30-day action plan. You've learned the principles. You understand the mindset. Now it's time to put it into action. And the best way to do that is with a simple, focused 30-day plan. Here's how it works. Step 1. Commit to one strategy. For the next 30 days, you're not going to chase new systems or tweak your rules every week. You're going to pick one proven setup, something you understand and trust, and you're going to trade only that. Step 2. Set your risk per trade. Decide on a percentage of your account that you're comfortable risking on every trade. 1% or less is ideal. Once you set it, you stick to it. No exceptions. Step 3. Keep a trading journal. After each trade, record the details: entry, exit, risk, result, and most importantly, your emotions. Over time, you'll start spotting patterns in your behavior that either help or hurt your performance. Step 4. Review weekly. At the end of each week, go back through your trades. Look for execution errors. Identify situations where you broke your rules and figure out why. This is how you turn mistakes into lessons instead of repeated failures. Step 5. Focus on process, not profit. Your goal over these 30 days is not to double your account. It's to execute your plan flawlessly, trade after trade. If you do that, the profits will follow naturally. Step 6. Protect your mental state. Take breaks. Step away after big wins or losses. Don't let emotions carry over from one trade to the next. At the end of the 30 days, something powerful happens. You'll not only see your results improve, you'll feel a shift in the way you approach the market. You'll trade with more confidence, less stress, and a deeper understanding of how to think like a casino. In the final segment, we're going to tie it all together. You'll learn how to fully embrace market uncertainty and why that might be the last mental barrier standing between you and consistent profits.
Segment 12. Embracing market uncertainty. The final step in trading like a casino is to fully embrace uncertainty. Most traders fear it. They want the market to be predictable. They want a setup that works every time in every condition. But the truth is, that doesn't exist. Uncertainty is not the enemy. It's the playing field. It's the very environment where your edge lives. Think about it. If the market were certain, there'd be no opportunity. Every price move would be obvious. Every trader would enter and exit at the same time. And if everyone sees the same thing, there's no one on the other side of your trade. Your job as a trader is not to remove uncertainty, it's to operate within it, to accept that anything can happen on any trade, and to know that your edge, applied over time, will produce results despite that randomness. This is why professionals thrive. They don't fight uncertainty, they adapt to it. They respect it. They build systems that can function inside it. And here's the shift I want you to make starting today. When you see uncertainty, don't see danger, see opportunity. Every unpredictable move is a chance for your probabilities to play out, as long as you follow your plan. So from this moment forward, stop searching for certainty. Start building trust in your process. Keep your risk small, play the long game, and remember, the casino never knows the outcome of the next hand, but they always know they'll win in the long run. Trade the same way, because when you do, you don't just survive the market, you master it. If you found this valuable, hit like, subscribe, and share it with another trader who needs to hear this. Most will never understand these principles, but now you do, and that changes everything.